Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Wednesday, July 5th, 2023. Before I click to the charts, as usual, just want to encourage you to please click like, subscribe to the channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this: daily SPY, daily triple Q analysis, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader to 3 to 5 month near-term investor, always looking for 20% swings on those underlying stocks. So check out wickedstocks.com. Here we are. Where to begin? I'll just begin as usual with the weekly chart, the bigger picture, and show you that, 5 weeks ago we settled above this 194.32 18-month descending channel top that set off a long-term buy signal. Our initial big picture objective is the 280.85 rising channel top that we on Monday pushed through, did not close above, so it is being tested as we speak. Overall, I've been mentioning how over the months ahead, possibly by the end of the year, we may actually reach that 414.49 all-time high from late 21. And I'll say right now that if we close this week, and I mean Friday, now any daily settlement 1% above 280.85, in other words, a settlement today, Wednesday, at 283.66 would be a tentative, actionable buy signal that is longer term in scope. It becomes sort of confirmed, if you will, validated fully with a Friday settlement of the same, 283.66 or higher, 1% above 280.85. And then we're just a few weeks away from reaching 313.60 to 314.66. This old shelf top high here back in August of 22. It could give the market trouble for a spell, for a week, 2 or 3, but I would expect if we were to close above this 280.85 rising channel top, that over the next 3 to 5 months we can make our way back to 414.49. That would put us by the end of the year. But until then, 280.85 still able to contain buying pressures through July. And from here, we could fall back into the 180s, 190s over the next month or two. Let's take a look at, let's see here. I'm going to work my way up. I need to show, I don't actually show it on this chart, but I'll just mention I've got 295.05 today as a possible intraday target. If we push, especially if we open today above 280.85, 295.05 in reach. 295.05 is, FYI, a 5/8 Fibonacci upside retracement from that 414.49 all-time high to the 101.81 January low of earlier this year. 5/8 back up. Classic Fibonacci, 295.05, if tested today, can contain session strength. If we close above 295.05, we just might reach 313.60 by Friday's close. That is a real possibility. But first, we need to get up and over 280.85, and that remains a meaningful resistance area. On the daily chart, it's 280.18, and this is the same formation. And we closed pretty much right at it on the daily chart on Monday. No buy signal. We are merely right now testing meaningful midterm resistance. It is like the analogy I like to use is the rubber band. The rubber band is stretching right now. Will it snap to the upside? The answer is yes, if we can close even today at 283.66 or higher, followed by a Friday settlement of the same. Then we're expecting bullish continuation once again to 313.60 to 314.66 within 2 to 3 weeks, and on to 414.49 by the end of the year over the next 3 to 5 months. But until then, we can get toppy here and fall off. 274.45, our intraday support. That is the high settlement price from a couple of weeks ago when we tested this channel top the first time. Now, the low from Monday is 275.11. 274.45 is just below that. I think we could bottom out here on an intraday basis, and once tested, rally back into the 280 handle, 280.18 to 280.85. If we break 274.45, 265.35 is in reach today. That is nothing more than a Fibonacci level. I think it's 3/8 on the way back down from the low a week ago to the high from Monday. But it could just know that continued settlements at or below 280.18 will keep this 245.39 new channel bottom in reach. By the end of next week is a possibility. I'd say over the next couple of weeks, 1 to 2 weeks, depending on volatility. And that is the play you could make right now if you like to trade both sides of the market. market, you can be shorting this vicinity in the 280 handle, anticipating 245.39. That could mean buying 245 or 247 out of the money puts that don't expire for at least several weeks. That could be the play right now, the downside. Or here is the big picture, 185.31. You could be buying 185 or 190 out of the money puts if you haven't already. Now, I know you may have done that a couple of weeks ago and now you're taking hit. Perhaps you actually stopped out of that out of the money put based on what played out on Monday, this gap higher opening and testing of longer term resistance in the 280s. So I will say once again that holding at or below 280.18, 245.39 in reach over the next 1 to 2 weeks, and over the next 1 to 2 months, 185.31. It would be a settlement at this point in time below 245.39 that I think would aggressively tip this market south through the rest of July, and within 3 to 5 weeks of closing below 245.39, 185.31 in reach, where we could actually bottom out into the fourth quarter, quite possibly the rest of the year, because it actually correlates well with this descending channel top at 194.32. So I'm way ahead of myself on all that. First, we would need to close below, 245.39, and that's not going to happen today. But if we settle today below 265.35 in this vicinity, I think there's a good case to be made that by the end of next week, we actually do test 245.39. Now, there are other things going. We've got new speed lines coming up in the lower 240s that will converge with 245.39 over the next few days. So we'll be watching those. But really, it is the holding at or below 280.18 to 280.85 that will keep the mid 240s in reach over the next 1 to 2 weeks. The mid 180s, mid 190s over the next 1 to 2 months. Now for the upside. I already showed you 195.05, that long-term Fibonacci level at the top of this. But if we close at 283.66 or higher today, 295.05 expected probably tomorrow. But over the next 1 to 2 weeks, we've got this 303.45 rising channel top. I just have it as an intraday resistance level because of 295.05. 295.05 able to contain session strength. And if we close above 295.05, 303.45 expected probably the very next day. One of the reasons I also call 303.45 just an intraday resistance level, whereas most of the time I might call this a weekly resistance area, is it's climbing at a very steep pitch, and within the next 3 to 5 days, it will converge anyway with this 313.60 to 314.66 area. So bottom line, closing above the 280.18 formation and above 288.85, which is the same formation on the weekly chart, by a 1% margin. I have to throw in the 1% because this is a longer term line study, and you can close just above these levels inside the 1% zone, and oftentimes the market will not follow through on that buy signal. So I've been using 1% for a long time. And if we close at 283.66 or higher today, this 313.60 to 314.66 region, then expected within several weeks or sooner, and the 414.49 all-time high by the end of the year. I think I've said everything there is to say. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com.